every single time without exception. Every time credit collapses, gold goes to infinity in terms of that credit. There will not be an exception this time. The only difference this time is this time it's global, and this time it's everything, and this time there are no escapees.
We are going to be closing above 50, and then just from a purely technical perspective, what that means is that all those sell contracts up at 50 have been used up, and then I would expect to see it much higher and more participation in mainstream. I mean, it's easier to buy an ounce of silver than it is to buy an ounce of gold.
Throughout history, every major credit collapse has followed the same trajectory: the expansion of unsustainable debt, the erosion of public confidence, and the inevitable return of gold and silver as the foundation of real money. What we are witnessing today is not an isolated financial event, but a worldwide repetition of that cycle. The illusion of stability created by decades of easy credit and monetary manipulation is fading fast. As faith in paper currencies deteriorates, nations and investors alike are rediscovering the timeless truth. True wealth is measured not in fiat, but in tangible assets that cannot be printed or defaulted upon. This psychological shift, from trusting credit to seeking value, is what transforms economic decline into full-scale monetary realignment. Rafi Farber and Lynette Zhang, two of the most respected voices in the precious metals community, have been warning for years that this reckoning was inevitable. According to them, gold's current surge is not speculation, but a natural response to decades of reckless monetary expansion. They emphasize that silver, often dismissed as secondary, is poised to become the centerpiece of the next financial reset. With its unmatched accessibility, barter potential, and historical 15-to-1 ratio to gold, silver is not just a hedge. It's a lifeline in a system where confidence in fiat has collapsed. Farber describes this as the reawakening of sound money, while Zhang calls it the moment history stops pretending that debt is wealth. This unfolding transformation marks the dawn of a new monetary era, one defined not by central banks, but by the return of real value. Gold will reestablish itself as the enduring store of wealth, while silver, driven by both industrial necessity and monetary demand, could evolve into the currency of everyday exchange in a fractured global economy. As the world transitions away from paper illusions toward tangible reality, the real question is no longer how much money you hold, but how much real wealth you've secured before the system resets for good. Now, let's watch the clips from the interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
We have a long way to go in terms of consciousness. This is, sort of like a monster, maybe roaring in the background and you turning around and saying, what was that? And maybe you were a little bit scared and you think that you don't believe in Bigfoot, but maybe there is a Bigfoot and you don't know for sure, and you're not going to discount all of the theories anymore. But in terms of time, I don't know if we have a lot of time. We have a lot of consciousness changing, but consciousness can change very quickly. That's what hyperinflation is. It's one day credit is money, or credit works, and the next day it does not. And the main point that I want to hammer here is that when gold does things like this, there is the general confusion among the mainstream media. They're like, oh, gold, we don't know why it's going up, but it's generally a safe haven asset and an inflation hedge, and that's why it has historically done that, and so people are going back to it because they always have, and we don't have any other answers other than this is tradition. That's not why. The answer is that gold is money right now. It always has been money, and all the other stuff is credit, and credit is based on money. The purchasing power of credit is based on money. You cannot have credit without it first being based on money, and all the other credits are credits based on the main credit, which is the US dollar, which is based on money. Everything connects. And that's why it's described as an inflation hedge, because it's just money that isn't inflated. And I would challenge the viewers of this show, and your viewers generally, and my viewers and Lynette's viewers, to play this little experiment in their head. Instead, in any sense that you could use the word dollar, or sorry, that you could use the word money instead of saying the word money in any sentence that you say or any sentence that you hear said on the media or from your friends, instead of the word money, just instead of the word dollar, sorry, instead of the word money, just use the word gold or silver. Just use that. And then you'll see how everything fits into place. You'll see how the gold and silver are the money. They're not an inflation hedge. They're just money that's not inflated. And as credit loses value, it loses value into money itself. That's what's happening here. The mainstream media doesn't get it. The people don't get it yet, but they think that maybe Bigfoot is real. Maybe the stackers are not totally insane. Maybe this is going to happen again, as it's happened every single time without exception. Every time credit collapses, gold goes to infinity in terms of that credit. There will not be an exception this time. The only difference this time is this time it's global, and this time it's everything, and this time there are no escapees.
I always say that I think everybody should do what the smartest guys in the room on any given topic are doing for themselves. And so since 2008, we have seen the global central banks pile into gold, and the last several years at the highest level ever. Now, when you look at a relative performance chart over, say, the last year or last 200 days, you see, I believe that we are in general in the melt up phase of this trend cycle. But what you also see is that gold and silver, silver's outperforming everything at the moment. But while everything is rising, you're seeing a rise in the spot silver and the spot gold markets at a significantly higher level relative to the performance of anything else. So what I think that's moving those markets is the smart money. And I think that that really started at the beginning of this year when we had this huge influx of the physical gold and physical silver into the US. So I think that this is nothing new. I think it's just becoming more visible, and that it will now trickle down to more of the masses.
What you see as the main catalyst currently driving silver, and maybe comparatively silver to gold for this loss of confidence in the dollar and dollar-based debt, etc., and a move into precious metals. How much of that do you think could move into silver versus gold? And Lynette, I'll start with you on this one.
Well, that's a really good question, because when I go back and look at the charts and going all the way back to the beginning of the silver markets, what I see is coming to conclusion on a double cup formation, which, to be honest with you, I don't think I've ever seen anything like this before. So a close above 50, just from a technical perspective, would mean a much higher spot silver price. It still doesn't come close, again, to the fundamental value, but success does beget success. And the higher that goes up, and remember, we've had a lot of silver stackers that have been touting the silver gold ratio for a very long time. To me, that's not a trade. That isn't why I would ever buy silver, because for me, it's about functionality. But I do believe that we are going to be closing above 50. And then just from a purely technical perspective, what that means is that all those sell contracts up at 50 have been used up. And then I would expect to see it much higher and more participation in mainstream. I mean, it's easier to buy an ounce of silver than it is to buy an ounce of gold, but you need both. You can't go one way or the other. And even when they both hit their fundamental value, well, wow, at that point, everybody's going to know how crappy, dollars are, or euros or shekels or wherever you are. And they're not going to want to convert back into that.
The silver's still not doing so well. It seems like it because we're at 50, but what's a dollar? If you look at any other ratio of silver in 1979, 1980, where we were back then, silver relative to stocks, silver relative to gold, silver relative to commodities, it was all much, much, much higher. Back then, we're still about like 82, 83 gold to silver ratio. In terms of just individuals, why would they buy silver? That's just because they can't afford to buy gold anymore because it's too expensive. So instead they buy silver. why I started stacking silver. Two reasons. First of all, I wanted enough to get through any kind of zombie apocalypse. Not literally. I don't think there's going to be zombies. The zombie bat in my background is mostly for illustrations, but if somebody comes behind me, I have a camera because I can see. Right, thank God we're doing this interview right now, so nobody can murder me because I have a zombie bat and I also have a gun at my side. Um, we're at war, so what am I going to do? Uh, anyway, silver is going to spike as it does very quickly. Every time it spikes to the same ratio. It spikes to 15 to 1, gold to silver, because even before we get to gold, if we go back all the way to 1873, what happened in 1873? They call it the crime against silver. Why? Because the monetary standard back then, before 1873, was you give the mint, the U.S. Mint, what was the amount of silver? Some fixed amount of silver, and then you would get a certain amount of dollars, and that was the silver standard of a dollar. It's in the Constitution somewhere, some amount of grains of silver. I don't remember what it is, but it was constant, and that was the definition of a dollar. So that gave the monetary demand for silver. People would deposit their silver to the mint, and then they would get dollars that they wanted to spend, because dollars would increase liquidity, because paper cash, as long as it's honest, is more liquid than silver coins, because if it's damaged, you can give it to the Fed or whoever, and they can give you a replacement bill, and it has 100% of the value, whereas a silver coin that is rubbed off is going to lose its value no matter what, because it loses weight. And there's nothing you can do to stop that. You can do things to mitigate it, but you can't stop it. So honest credit is always better than money, but money is always better than dishonest credit. And the question is, when does money override dishonest credit? When everybody realizes that the credit is dishonest, and then the money goes back to 15 to 1. So eventually you're going to get to 15 to 1. And the two reasons why I bought silver is, one, I want enough silver to get through a zombie apocalypse. Not literally, but some kind of situation where the division of labor is breaking down, and I can spread money into my immediate surroundings to sort of like give a CPR to the monetary system in my immediate surroundings. And the other reason is, any extra silver that I have, I would exchange for gold in 15 to 1, and then figure out what to do with it later.
In a major shift rippling through financial markets, Wall Street institutions are quietly moving into gold and silver, a signal that confidence in paper-based assets is waning. Analysts observe that this transition marks a structural realignment in capital strategy, as major firms begin recognizing what central banks have acted on for years. Tangible assets hold lasting value when currencies lose credibility. Rafi Farber notes that this shift reflects a herd mentality within financial circles, where one firm moves, others quickly follow. But this time, the pursuit is for real money. With inflation weakening the dollar's purchasing power and uncertainty surrounding global debt markets, gold is re-emerging as a store of value, not through speculation, but through necessity. Lynette Zhang adds that the debasement trade, the recognition that fiat currencies are intentionally being devalued, has become an open topic across financial institutions. She emphasizes that despite recent gains, gold and silver remain fundamentally undervalued compared to the scale of monetary erosion underway. Rising spot prices, she explains, are not about market excitement, but about fading faith in government policy and central bank stability. As economic divisions deepen and trust continues to erode, investors are seeking protection in assets that cannot be inflated or defaulted upon. In this new reality, precious metals are no longer just hedges. They represent the backbone of financial survival in a system running out of trust. Let's get back to the interview.
I think that mainstream Wall Street firms are all just followers of each other, and they follow each other in a circle, and they just run after each other faster and faster. And that's what the business cycle really is. It's just a bunch of copiers following each other in a tighter and tighter circle, chasing each other's tails. It's like, instead of one dog chasing its own tail, it's just a bunch of dogs chasing each other's tail. And once the dog sees that somebody's tail is, over here, it'll just change, and then the circle will go to another direction and start spinning in another area. So do I think that Wall Street will always chase the asset that's going up? Yeah, they seem to do that. That doesn't take much smarts to say, oh, well, now gold. Well, let's do the experiment that I said I recommended doing at the beginning. Like, instead of saying gold, say money. Instead of saying, when people usually say money, say gold. When people usually say gold, say money. So if money is at an all-time high relative to dollars, then should you go after money instead of dollars? Yeah. I mean, it's not going to, you don't have to be so smart to do that. And do I think other people will start to chase money also when they realize that dollars are falling? Yeah, I think they will. And that is what hyperinflation is. It's when everybody realizes that they need money because they don't have any, and that the price of everything is falling in terms of money, and the price of everything is rising in terms of credit, in terms of dollars. So everyone will chase money at the same time. At that point, we should be like, maybe now that everyone wants money, we should maybe buy some stocks. I mean, we haven't gotten there yet, but maybe I'll be the first gold bug or money bug to say, I think gold. I think it's enough gold. I think the whole banking system is now kaput, and let's go after some assets that aren't money now. Maybe I'll be the first one. Maybe I'll be like, among the handful of first ones. I'll leave. I'm not married to being a gold bug or anything.
I think that there is a lead that the central banks have put in place, and I think that Wall Street is starting to recognize it, because one of the big shockers to me was seeing how openly Wall Street is talking about the debasement trade. And so if they're now talking about the debasement trade, then of course we're going to see outperformance in spot gold and spot silver. But I'd like to emphasize right now that even though technically they are overbought, fundamentally they are still critically undervalued. And who would know this? The central banks would know this. And I do think that Wall Street is starting to follow that lead. And I'd also like to take you back to the last shift in the early 80s, in the 70s, and then going into the early 80s, when Wall Street then as well got on the gold bandwagon and even established some funds with collectible coins. Wall Street's always got to make a buck. They've got to find what they can push up. And if they are openly talking about this debasement trade, that's going to continue now because there's no other option. And so there's no doubt in my mind, especially entering a hyperinflationary phase, if we are indeed in that melt up phase where you're going to see everything go up, well, that's when gold and silver on the spot market really perform. But nothing performs as well as when the public loses confidence. And we're seeing that more and more. And that question of confidence here in the US, the confidence that the government can come to terms and actually work on something together. Never have I seen it this divided. And what that does, whether it's politically intentional or not, is it further erodes that confidence level. And that's the only thing that's holding it together anyway. So it makes a lot of sense watching Wall Street beginning to participate and then encouraging their clients to participate, because they want to live to play another day. And if you use up all the principal, guess what? You got nothing to play with. And so what will gold and silver do? What it's always done, create that bridge to get from one currency and that reset into the next currency. And I think it's beginning to be recognized, but I don't necessarily think that that's a brand new thing, because we've already been watching those big box stores here in the US, like Costco and Amazon and Walmart. They're not carrying gold and silver because there's no demand from the public for it. So this isn't actually something new, but I think that it will, the rise when prices go up, that encourages more participation, because fear of missing out. And I don't frankly care how anybody starts to get involved in the metals markets. Just get involved, just own it. And you know me, I'm a physical gal, because we're in this transition.
The coming years could mark a decisive turning point in global finance, where tangible value overtakes financial illusion. As more capital flows into physical assets, the system built on debt and speculation may begin to fracture under its own weight. Traditional markets, once fueled by cheap credit and investor optimism, will likely struggle to maintain stability as liquidity thins and confidence erodes. In this environment, hard assets are set to become the cornerstone of a new monetary order, one defined not by promises, but by possession. If current dynamics persist, the next phase of this transformation could see a full repricing of global wealth. Currencies may weaken further as nations compete to retain purchasing power, while commodities gain recognition as the only true measure of stability. Financial institutions, once skeptical, will have no choice but to adapt to this reality, accumulating reserves in physical form rather than digital credit. The future may not bring a dramatic collapse overnight, but a gradual shift where real value quietly replaces paper illusions, redefining what it truly means to hold wealth in a world no longer built on trust. Share your thoughts in the comment section below. If you found this message compelling and enjoyed the video, be sure to give it a thumbs up, share it with others, subscribe to our channel, and turn on post notifications for more thought-provoking content. Thanks for watching.